In 2023, I lost 33,000 US dollars trading. It hurt, but it also taught me lessons that completely changed how I trade and invest. In this video, I will share with you exactly how that loss helped me rebuild an 83% return this year and how I am structuring my 2026 strategy to keep growing. I'm Isaac Jonas, a Zimbabwean-Canadian economist and founder of Streetwise Economics. Over the past few years, I have learned that success in the market isn't just about numbers. It's about mindset, patience, and discipline. In this episode, I will take you through my biggest lessons from blowing up my account in 2023 to rebuilding with a plan and purpose based on research, fundamentals, and option strategies like cash secured puts and lips. You will see how I approach risk, why I focus on psychological preparedness, and exact framework I'm using to trade and invest in 2026. If you ever taken a loss and wondered how to bounce back, this video will give you the blueprint. Let's dive in and let's make 2026 your comeback year too. Don't forget to subscribe and like so that this video will go far and viral. Enjoy. Hey everyone, welcome back to Streetwise Economics. Before we dive in, this is not financial advice. I'm simply sharing how I personally plan to trade and invest in 2026. What's worked, what hasn't, and how I'm structuring my portfolio for the year ahead. Now, let's talk real. Growing up in Zimbabwe, I did not learn much about investing or let alone trading money. We were taught how to earn money, not how to make it grow or even keep it. Fast forward today, I trade part-time, but honestly, it feels like full-time because trading, research, and content creation for this channel and this journey has been full of both wins and surprises. Now, let me take you back to 2023. I had just had a long conversation with my friend Kudabiza, who also trades options, and at that time he was based in New York. And that chat changed everything because it pushed me to start thinking about taking trading seriously, to study it academically and as the way an economist would. But I will be honest, when I started trading options, I thought it would be easy. Big mistake. A few months later, I lost 33,000 US dollars. You heard that right. 33,000 US dollars. I had used leverage. That means I had borrowed money, and when the market turned, I had to sell part of my investment actually to pay that off because that was a margin account. I had to pay it off. Otherwise, the interest was going to just compound. So that experience humbled me very fast. After that, I restarted small, and even now, there's an account that I started up with 15,000 US dollars and 300 Canadian dollars, roughly 21,400 Canadian dollars in total when I started. So no shortcuts, no margin, no gambling, just discipline. And as of October 2025, that same account is up 83%. And I will flash a screenshot right here so that you can see that for yourself. Those who have followed my journey from the start know that this was simply not luck because it was a process of falling, learning, and rebuilding. Over the past 2 years, I've made mistakes, refined my systems, and discovered what actually works for me. I trade mostly in the US stock markets with the strategies that have evolved, especially using options. Now, if you are new here, an option is a contract that gives you the right but not an obligation to buy or sell a stock at a specific price before a set date. When used wisely, options can let you generate income, also manage risk, or enter into positions more efficiently. But they can also wipe you out. if you don't respect risk. I learned that the hard way. So, lesson one that I've learned so far before we get into my trading strategies is that trading, just like investing, is not a sprint. One of the biggest lessons I have learned is that patience beats activity. When you start trading, you want to be in every move, every breakout, every hyped stock. But over time, I realized that over trading kills performance. So I've built a tested system. Part of that system is psychological. I keep 6 to 12 months worth of savings in cash in an emergency fund. That cushion means that I never trade because I need money to pay for basics like bills. I only trade when the setup makes sense. That is very key. Now, that alone changed how I think because trading out of desperation is a guaranteed way of making emotional decisions, in my view. Two, trade with a foundation. I only trade companies with strong fundamentals, solid cash flow, long term debt, and leadership I trust. I know I said it in another video about my investing plan. Why? Because I trade mostly the stocks that I would want to invest in. Because I want the confidence that those stocks they meet a certain criteria, which I have just shared with you guys. The market can behave unpredictably. Sometimes you see the Dow Jones can barely move for years, an example, while the S&P 500 rallies hard. That's why I focus on fundamentals first. When a good stock drops 10% or more after earnings, it still passes my checklist. I get interested. That's when I might sell a case secured put, buy a leap that is a long-term core option 1 or 2 years out. Selling cash secured puts lets me generate income today on stocks that I would happily want to own tomorrow at a discount. And when they recover, I usually close those positions for a profit or cut early if it's not working, usually around 45 days in. For 2026, position sizing and patience will remain the foundation of my trading plan. So let's dive into my trading plan. So here is how I'm structuring my trading portfolio heading to 2026. Like I said, I want to focus on undervalued stocks, companies with cash, strong free cash flows, and low or little to no long-term debt. I want to use leap options with high delta, meaning they move closely with the stock price. High delta leaps behave more like owning the stock itself, but it requires less capital. I want to avoid overvalued names, especially in the sectors I don't understand. I want to keep 20% in cash ready to deploy when the market drops, just like I do in investing. That is my opportunity fund. I want to rotate profits, move money from expensive stocks into undervalued opportunities. And above all, remember, you can't predict the market. My goal is not to focus the market, it's to react intelligently. So let's talk about mindset and research. Most traders fail not because they are bad with charting, but because they don't read enough. They buy stocks they don't understand, then they panic when the price drops. I spend most of my time reading, researching, and observing the macroeconomy. That is, interest rate moves, inflation data, earnings trends. That's where my confidence comes from, knowledge and preparation. So I talk about this in detail in my other videos on my website here at Streetwise Economics. And I also have a website, www.streetwiseeconomics.com, where I also share some trading courses and community updates. If you'd like to learn alongside a community of real traders, you can find that there too. So that's my 2026 plan. I'm not chasing quick money, I'm building something sustainable, one smart decision at a time. I lost $33,000 once. I learned, I rebuilt. And now my goal is simple: grow with discipline, patience, and purpose. If you find value in this video, like this video, subscribe, and drop a comment below. What's your biggest trading lesson for the past year? Until next time, stay wise, stay patient, and stay streetwise. I'll see you in the next video. Bye bye for now.
And hey, if you want to stay connected and dive deeper into trading and economics, make sure to follow me on X and Facebook for daily insights and market updates. Don't forget to subscribe to the Streetwise Economics YouTube channel so you never miss a video. And if you're ready to take your trading to the next level, head over to www.streetwiseeconomics.com to book a one-on-one coaching session with me. Let's build your financial future together.